All right, what is up, everybody? Welcome to another episode of Real Estate Wholesaling Analysis. We're gonna be starting soon in a second here. Just gonna be waiting for a few more people to be joining. If it's your first time over here, thank you for joining. Welcome to this series that happens every Monday, Wednesday, and Friday at 6 p.m. Pacific Standard Time, where we analyze some real estate wholesaling deals. Either going to be on market, off market. It really depends. If somebody has like a property to share, we use some of those. If there's no properties, then I'll try to find some deals out there and go step by step on how to like analyze like a deal. Part of the real estate process of wholesale analysis is understand some of the key things, key metrics to help you find what makes like a deal work, and sometimes what won't make like a deal work at a time. So it depends on what it is that we are able to like analyze whatsoever. Um, my name is Elton, like Elton John. I'm the host that hosts this series. I'll be doing real estate wholesaling for the last 11 months already. Transitioned to buy like my own properties outside of California because I happen to be in California whatsoever. And I've been doing this again for the last 11 months. A little bit more background beyond that is I've been doing sales all my life, basically. The last 10 years of my life have been just a lot of sales jobs and management positions. So when it comes to like real estate, it actually came out really easily because it's just literally the same step. It's just it requires a lot of sales, communication, building relationships, and of course, part of the process of sales is asking a lot of questions. So if you happen to be like an introvert, it's perfectly fine. It just takes some small steps for you to build that confidence. But honestly, it takes for you to build that confidence. All you have to do is just take action, get started in any way possible, either by reading books, watching videos, and just slowly and steady start getting in front of other people's faces to figure out if they're interested on selling, or if you're connecting with agents. That's the way I started. I connected a lot with agents. It really depends on which route you want to take. But regardless, you do have to put some type of elbow work into the process. So again, no matter what level of experience and confidence level you have, all that matters is that if you take action, you will eventually are going to be able to make it like your first deal happen. And then if you really like it and are passionate about the process and also the reward as well too, then it's always really good to continue doing it because it just the passion takes over anything else of the process or whatsoever. So if you're interested on learning real estate wholesaling and especially real estate analysis, then this could be the best series for you. And we just gotta go ahead and start it because we usually start like around 6:05. But if there's any questions along the way, you can drop your questions in the chat, or you can wait until the end of the meetup, so that way we can do some Q&A, and I'll be able to answer some of your questions if you have any questions. Again, part of our analysis is we don't stick to just one market. We analyze like all markets out there whatsoever. And I don't like to like niche down to like anything specifically. So if you don't analyze your market, please do not get mad whatsoever, as I like to analyze all markets available as possible. If you want to look, if we analyze your market in the past, I do have my videos uploaded onto my website, eltonvargas.com/education. So all the previous, I think it's like 30 plus 40 hours of like a previous live events that we've done there. All that content is available there. There's some quizzes, some forms, some blogs, pretty much anything that you can do in there. And if you want to book your one-on-one, you can book your one-on-one with me there if you happen to have like any specific details or questions about your real estate wholesaling. So real estate wholesaling, what is real estate wholesaling? It's basically the process of you getting a property under contract, kind of like as if you're buying the property. But part of that contract, it does state that you are doing and or assigns, or basically which you're assigning to like somebody else. Again, I'm not going to get through the entire process of real estate wholesaling, but that's the concept of real estate wholesaling, where you're going to be assigning that contract and finding an actual buyer to take over that property, and they're the ones who are going to be fixing it or they're going to be holding on to the property whatsoever. Um, Part of the process is there are a few other steps to go along the way in terms of like real estate wholesaling. So it is part of our analysis is, so we're going to be focusing is just mainly on the repairs and how you should be analyzing like your offer from there. part of the process of analyzing, like bringing like an offer and estimating like the repairs. First things first, we have to first things first is we do have to understand the very first fundamental of what makes a deal work is the property's worthiness after it gets fully updated, or in this case is what we call ARV, or after repair value. Basically, how much will the property be worth based on the area information that we're able to get, and see how much the property is worth after it gets fully updated. Anything beyond that, the calculations get very calculated very differently from investors. So you are going to have a few common investors, which I'll say right now off the bat is investor one and two are your most common ones. Occasionally, or every so often, you are going to come across an investor that does things very differently across the board. And it's perfectly fine as long as you understand how your buyers or your investors do like a lot of the numbers. It's always good to understand how active they are, how many deals they want to do on a monthly basis, and also the kind of a profit or margin or return they're looking to make out of each single deal. Those are the top three really essential questions that you should be finding out from a buyer side. So that way you're able to see that you have a buyer that is very active. If you find somebody who's not very active, you're not going to be able to sell that property over to that buyer because again, they just don't have the capital, or maybe they just like to keep they're very tight on the money on other investments whatsoever. So when a lot of investors calculate their stuff, it's okay if they do it, it's perfectly fine. It's just understand how they calculate it. Because again, if you happen to come across a property that best fits that specific buyer and you get it at an amazing price, they'll definitely want to close and accept your offer as quickly as possible. But first things first, when it comes to analyzing deals, is make sure that you know how much the property is going to be worth after it gets fully updated. Of course, it can't get fully updated if you don't estimate how much repairs is it going to need. And the thing with repairs, I always emphasize that I've been emphasizing for the last 30 plus episodes of these live meetups is repairs is a plus or minus game. And what I mean by that is if our property ends up needing, let's say $50,000 worth of repairs, I bring it to one buyer. That one buyer is going to tell me that this property actually needs $75,000. Okay, the plus side. And the minus side, I bring it to another buyer and they tell me that they're able to get away with like $35,000. Again, it's a plus or minus game. So when it comes to repairs, don't niche down to the specific number specifically. Maybe you're like getting a contractor, maybe you're doing like an appraisal on the property. Maybe you're doing like a few other things so that way you can find like how much exact repairs are going to be. Because at the end of the day, it's really down to your investor or your buyer that is going to be doing the work. And depending on what kind of materials and work they end up doing, that's where the plus or minus come into place. And that's why a part of my process is I've set specific standard numbers when it comes to repairs. These are going to be the average numbers that you're going to be looking into, depending on the condition and the type of repairs that you're going to be doing. So if it's going to be light repairs are more on properties that are being rented out, or they're more fully updated, or rather in better condition than most properties out there. And all they need is a few light touches like paint, maybe change the carpet, maybe add some like extra detail like in the landscaping, maybe do again very minimal work that is going to need like in terms of like the property. Now, more the prices for those light repairs are going to be between $10 to $20 per square foot. This is going to be nationwide, by the way. Average repairs, this is more on those project homes. And when I say project homes, these are the ones that are going to be needing some type of work. They're really outdated. Sometimes they're just really mistreated. Again, there's going to be those properties that have like overgrown grass. And they just look abandoned. They're going to need some work in the main areas being the kitchen, the bedrooms, the bathroom, the flooring, even doors as well too, possibly windows, possibly roof, possibly the utilities like HVAC, furnace, water heater, landscaping as well too. So again, it's a project for a reason. So this is where a lot of fix and flip investors are going to be coming into. The average price per square foot on these repairs are going to be between $25 to $40 per square foot. The next type of properties that we're going to be looking into in repairs, These what I like to call are the nightmare homes. Nightmare homes because it's basically kind of like starting all over again. In terms of like internally, you're not doing anything to like the floor plans or layouts. It's just pretty much stripping down everything from the home. Occasionally, it depends on where you're looking because so a lot of Midwest states, you end up doing like a demolition, and also depending on the investor and the property where how much land is available as well too. Some of them do the demolition and start all over again because they end up doing multifamily townhomes. So that's something very popular that is happening, or well, it's been happening for a couple of years now, but it's just increasingly getting more demand for those type of townhomes as well too. So it really depends. But these gut job homes or nightmare homes, again, I could require a full boatload of repairs, and anything beyond that is extensive. Bigger ones are gonna be like foundation as well too. Foundation, it's really expensive in terms of like updating or just repairing, or depending on what the condition is. But this is gonna take a little bit more heavy capital, and this is gonna be between 45 to like $60 per square foot on those repairs. If you happen to be on states that are more expensive, states like Washington, California, Texas, Florida, New York, Massachusetts, and a bunch of other states where it's a little bit more expensive in terms of like the market areas, then additionally, I recommend to add 15 to $20 per square foot, depending on the repairs. If it's light repairs, 15 to 20 from the original numbers of 10 to 20, 25 to 40, same thing, 15 to $20 per square foot. And the gut job repairs, same thing, 15 to $20 per square foot. Just because again, either it's gonna be a little bit more expensive in those market areas whatsoever. So just to give you like a heads up, because again, these average repairs are nationwide, but again, there are some states where it's just a little bit more expensive, which is some of the ones that I mentioned, or there's some, again, those are other states as well too, but I didn't mention whatsoever. Next is part of the process and what helps you find the ARV, because the repairs, it's analyzed it down to like just looking at a lot of pictures, and I've been involved in some other projects as well too. So I've gotten like a sense to what kind of things I should be looking out to in your spot. If you don't have that experience just yet, or you're building up to that experience, it's always good to start locally so that we can see what a lot of homes are looking like, and also maybe even network with other with investors, so that way you can get like a sense of roughly how much repairs are going to be estimated. But again, sometimes a lot of pictures end up telling like a lot of the story. So the example over here on the gut job repairs, we can see that the kitchen needs some work, the flooring, the painting, the wall needs some work. So you start getting into like more details. But what makes this like a gut job home is you can start seeing like there's major holes on the roof. Sometimes there's like these stains on the wall, so there could be like a plumbing issue as well too. And again, depending on what anything else that it needs as well too, you start differentiating what kind of level of work it needs per property. But pictures say one thing, but seeing properties in person tell you a whole better and whole different perspective on what the property actually needs whatsoever. Um, does anyone have does anyone have a flip for wholesale? I don't understand what you mean. Does anyone have a flip for wholesale? Um, the part of the process of finding the ARV is looking at similar properties, or AKA comps or comparables. And what I mean by that is whenever you're looking to find the ARV is you're gonna be looking for properties that are fully fixed up, so that way you can see what the that market or on properties that are fully updated is like. But additionally too, you want to look for properties that are currently again in bad shape or really outdated shape, so that way you can see where properties are being sold at. And because again, those are going to be two different markets as well too. Properties in its current assets condition versus properties in a fully updated condition are two different markets. So it's always good to pull comps on both sides. But whenever you're looking for comps, you want to make sure that you stick within certain parameters. Some of those parameters are going to be first thing first is the living space. So the square footage of, if a property is like 1,500 square feet, you're going to be looking at plus or minus 300. So plus 300 is all the way up to like 1,800, and minus 300 is going to be down to like 1,200. So between 1,200 to 1,800 is where you're going to be looking for comps. The lot size, this is going to be varying if you start comparing acres of properties. So if you have acres, quarter of an acre, half an acre, 3, 4, 10 acres, again, you want to start comparing apples to apples. So make sure you compare the lot size as well too. But if you're looking into like a home that is 6,000 square feet home, in terms of like the lot size, which is going to be pretty standard, 6 to like 8, maybe sometimes 10,000, if anything. Those are the ones that you're going to be comparing mainly a lot of the living space. But again, if the property on the description says a quarter of an acre, that the land that is being sold in terms of like the land size, then you want to start comparing land as well too. Next is when we're looking for some of these comps, you want to look within a specific radius, half mile to 1 mile radius. You can go a little bit more extensive, like up to 2 miles. The biggest thing with this though is sometimes are going to come across major roads, highways, or just what I like to call double yellow line roads. And what double yellow line roads do is they split up the neighborhoods. So one side is one neighborhood, and the other side is a whole different neighborhood. The reason being so is because that major road has a constant flow of traffic from commuters in the morning and the afternoon, from buses, like an example right over here, also from delivery trucks, Amazon, UPS, FedEx, semi trucks, just getting a lot of deliveries being done to like other businesses. And of course, maybe some construction trucks as well too, where the city is doing some construction. So it's going to be like a major road that is going to be taking, again, a lot of traffic on a daily basis. So when you're looking at a lot of these roads, think about this road or major road to be kind of like the end of that specific neighborhood that you're looking into, because an appraiser, no matter how similar one home is to the on to another home on both sides of the street, an appraiser, whenever the property gets appraised at its new after repair value, they're not going to be looking at two different neighborhoods. They're going to be sticking within the same neighborhood where that property is at. So they're not going to be crossing this major road to look for a comp that no matter how similar it is, it's going to be like on the other side of the road. They just won't do that whatsoever. Additionally, when you're looking for comps, make sure again stick to apples. So compare the same years on the property or plus or minus 10 years. Don't pull a comp that is like 2024 built, yeah, or 2023 built, or even 2022 as well too, if you want to go that far out. But brand new built homes are going to be very different from the material to the legality of getting it built as well too. To comparable to like a 1940s home, just the materials are going to be across the board very differently from one another. So don't compare those to one another. Stick within the same years whenever you're looking at comps. And again, look for comps that are both on the good side and the flip side. So you want to be able to pull at least 3 comps. And when looking for comps as well too, look for different time frames. And what I mean by different time frames, there's going to be past, present, and future. Past, those are properties that have already sold in the past in the last 6 to 9 months, or even up to like 12 months in some cases. Then you're going to be looking for present properties that are currently under contract right now. You want to look at those because those are the ones that are telling you like what's happening with the market. If you see a lot of properties that are under contract, then that's telling you that the market is becoming very hot or very popular at the moment. And if it stays like that for, especially right now, March, April, May, June, all the way up to like October, these are going to be the hot times where a lot of properties are going to be selling. So homes, especially if you find like a great home that it needs a great amount of work, investors are willing, sometimes are willing to like overpay for them just because they like to be very competitive. Um, does anyone have a flip for wholesale? I'm looking to buy a deal. Oh, Zachary, you're looking for for a deal. I don't know if anybody wants to answer to that whatsoever. But part of the process, again, looking at past, present, and the future is look at what properties are selling right now currently on the market, because properties that are selling right now on the market is basically telling you what's actually what properties are getting fixed and flipped, what areas, and how much of those properties are getting sold for as well too. So past, present, and future pull comps. So that should be easily you should be able to pull comps from those three. And again, look at both the bad and the good So that way you can also determine if your offer it's like way too low, or is it way below from what other properties have sold for, which is perfectly fine if it's way below as well too. It just depends on like on the motivation from the seller side, but also look at the properties of how much they're selling for at the moment as well too. I'm gonna be going through like a breakdown of what's gonna be like a good deal. And when I say good deals, because I've met some buyers that are perfectly fine with these type of profits. Again, it really depends on your end buyer at the end of the day, how much they want to make out of a deal. So we'll do like an investor breakdown. And I'm gonna be using some free resources that along the way, like Redfin, Zillow, Realtor, and PropWire. These are free resources that can help me find. I'm not an agent, so I have to use outside resources from the MLS to help me analyze a lot of the deals, which a lot of you might not be agents. Some of you might. So the ones that are agents, hey, kudos to you. You have access to what a lot of us don't. And another thing is I built some of my own calculators to help me expedite my process of analyzing. So I'm going to be using the ARV calculator. And of course, there's like I do have like a bundle if you want like some of the calculators and like a CRM to keep a track of all your properties and your people. Then it's available on my website, eltonvargas.com/calculators. So with that being said, let me look for some deals. If you guys happen to have like a property that you're trying to analyze or you're struggling to analyze, you can go ahead and drop the address in the chat and yeah, give us any details that you have, if anything. Or Zachary looks like is looking for like a deal. So if you have a I'm not sure if Zachary is like a buyer by any chance, but if you're a buyer, make sure Zachary put your buy box in the description and your contact information. If you happen to be looking for some deals whatsoever, so that way anybody can reach out to you. But if nobody has any of that whatsoever, it's perfectly fine. Like I said, I'll be using some of mine. But let me pull the investor breakdown really quick. That way I can show you guys this. Here we go. Investor, shabam, shabam. Let me share this. All right, here we go. Let me share my screen back again. And let's go back here. All right, here we go. So this is going to be the investor breakdown. This is going to be the strategy. A lot of you might know it. If you don't, it's perfectly fine. It's called the 70% strategy, which basically a lot of investors buy properties at 70%. Some of them buy at 75, some of them buy at 78, 80%. Again, it really depends on what a lot of investors do at the end of the day. But basically, we're going to be using this strategy for right now because it's very well known out there. So first things first, the way it's going to work is you as a wholesaler, part of your job is to look for properties. So you're going to be looking for a property out there where you find a seller and the seller is really motivated on selling the property. You find out why they want to sell. They're okay with cash or even financing, but they need access to the money within 45 days or less as well too. They still happen to be living on the property, but again, they're really motivated on getting the property, but they came out with an asking price of $764,000. It's a little bit steep, possibly. So now we have to find out a few more details. First detail we have to find out is besides how do they come up with the price, also the property. What kind of condition does the property need in terms of like repairs, Mr. Miss Seller? And then you end up checking the property, or maybe they send you some pictures, or you have somebody check out the property for yourself if you're not locally. But you end up estimating that the property needs roughly around $80,000 worth of repairs. So we have the asking price, we have the motivation of the seller. We find out like the time frame that they actually do need access to the funds, or they want access to the funds. You find out the repairs, possibly repairs, because again, repairs are plus or minus from there. And then after that is we have to look at the neighborhood. So that's where you have to look at the comps in the area and then find out what the ARV is going to be for that specific property in that area. So we end up doing our due diligence and we end up finding that the properties in the area, the most that they can sell for is going to be $875,000. So then now you have to start thinking of putting yourself as the investor, and then this is how the investor will calculate the numbers. Again, some of them do it like this, some of them do it very differently. So it's make sure that you understand how your investor does it at the end of the day. Um, so the way this investor will do it is they have the ARV, they subtract the repairs from the ARV, and they're gonna get this new ARV, which is gonna be $795,000. Let me highlight it in blue. It's gonna be $795,000. We're gonna multiply that number by 70%. And what that 70% or what the 7% strategy is about is basically 20% is going to be their profit, and then 10% is going to be towards like closing costs. Because part of our contingencies is we told the seller, hey, we're willing to pay your closing costs, so that way it's a lot easier for you. So the offer that we bring you, Mr. Seller or Miss Seller, is basically the money that you walk away at the end of when at the end of a closing. Without of course, the only thing you have to take care of on your side is make sure you take care of side of your taxes on the money that you're going to be earning from this deal. So basically, we subtract that or we multiply 795 times 70%, and the investor's highest offer is going to be $556,500. That's from the investor side. Again, you're wholesaling this, so you're gonna be you got a perspective on where your end buyer might possibly be at. Again, it's a plus or minus game, but somehow some way you end up working with you end up explaining the seller how you do your business, that you're willing to pay the closing costs, that you're willing to make it like a cash offer as well too. So you're trying to make it as easy for them. Again, make them understand that the offer that you're bringing, or aka on this example, is you end up getting the property in the contract for $150,000. That's how much the seller is walking away with. And this is an example without like any mortgage. So the property is free and clear of any debt. There's no liens. The taxes are always paid. So it's a great, and the only thing is just the property is really outdated. But this $550,000 is what the seller is walking away with at the end of the closing time of the closing date. And again, they only have to pay taxes on whatever it is that they earn from this out of the $550,000. So you get the property in the contract for $550,000. Now, whenever you have the property in the contract, what you're going to be doing next is you're going to be doing a assignment of contract sale, or aka selling the contract of assignment to an end buyer. So you got the property for 550. Now you're going to be doing a contract of assignment for a wholesale fee of $20,000, which you're going to be selling the assignment of contract for $570,000. And you might be asking, well, why would I sell it for $570,000 when an investor, the most that they're willing to pay for is 556? Because you already did the hard work, you already did the marketing, or however it is that maybe some door knocking, driving for dollars, whatever marketing strategy, if it's inbound or outbound that you did to get this property or get in front of this seller and they're interested in selling, you did the negotiations, you did the cold calling, cold email, whatever source that you did to get in front of the seller, you did all the work that you have to get compensated for it. And again, it's up to the investor at the end of the day if they're willing to, if they're interested in purchasing the assignment or a contract at your asking price, because they don't know how much it is that you got the property in the contract. We know, we know like on the back end the most that they're willing to do it, but we don't know exactly where the how much interest they might have on this deal once they're able to check out like the property as well too during like the inspection period. You allow them to check it out and then seeing how much are they willing to pay for this deal. So even the wholesale fee, if it's $20,000, sometimes they might even negotiate with you and then try to bring your wholesale fee down like a little bit. But again, they don't know at the end of the day how much it is that you got the property under contract. You could have gone for $300,000 and then sell it for $550,000. So it's really up to who is willing to purchase your assignment or contract for sale. But of course, you want to put it at a reasonable price where it makes sense and where it would also make sense from the buyer side. So then the buyer or the investor at the end of the day, they're going to be paying the closing costs. So that's gonna be an additional expense for them from your asking price. So now we're gonna be doing an initial investment, or how much is the investor gonna be spending in the beginning, which we're gonna add all those three numbers up. So we're gonna be adding the $570,000, aka your assignment of a contract, the closing costs plus the repairs. Our investor initial investment on this property was $705,000. Now, if we look at it from their perspective, once they're able to fix the property, let's say it takes like 2, 3 months for them to fix up the property, then from here, this is where they're gonna be marketing the property depending on how much it got appraised for. So they're gonna go based off our numbers. Our ARV happened to be $875,000. The investor is gonna be paying closing costs. So they're gonna be paying the closing costs again. They're gonna be paying the agent fee who's gonna be selling the property. If they're not agents themselves, have somebody listed out for them. So they're gonna be paying some agent fees. And out of that number, part of their profit is going to be $796,000. But from that initial investment took some money away. So now that initial investment was $705,000. So we subtract the 796 from 705, and what this investor happens to make at the end of the day happens to be, instead of being $159,000 like it showed earlier, it only happens to be $91,250. So instead of being, which I have it right here, instead of being a 20% profit, it turned out to be a 11%. I think, yeah, it turned out to be a 11.48% profit for the investor. So again, this could be a plus or minus game, because who knows if the investor happens to sell it at 875, or it could sell for more than what the asking price is. It can sell for maybe 890 or maybe $900,000. It really comes down to like the work that was done and how much the property gets appraised. Because again, by the time it gets appraised 2 or 3 months later, the market is going to be very different than it was 3 months ago. And especially 3 months from now, it's going to be like summertime. So prices are going to be like a little bit higher. Maybe interest rates drop like a little bit as well too. So it's just a market condition where real estate is basically a numbers game, and it's always going to be a plus or minus game from there whatsoever. So that's the full breakdown from this side on both the investor and your wholesale side as well too, including with some like expenses, some agent fees, closing costs as well too. But if you guys have any questions about that, again, you're able to drop it in the chat. I do see a property actually. So now we're gonna do a live analysis of some properties. So let's check it out, because we do have a listing over here. All right, let's check it out. And Zachary, looks like Zachary is a buyer, so he put his description in the chat. So if you guys want to take a look at that, or if you have a property, he put it in there for you guys. So that way, if you're interested, you know who to reach out to. And he put his buy box and his criteria on how to do a lot of these deals. Can we look at this address? Okay. Chicago. You're able to wholesale in Chicago. I'll double check. I'm sure you're not able to do wholesale in Chicago. I think like your first wholesale deal is completely legal, but then after that, I think you have to get like your license. You can do one per year. Yeah. But let's still check it out. Let me share my screen one more time. Let's see. Let's do desktop one. All right, cool. So we have this address. Let me go with Zillow. Oh, why is this not pasting? Okay, cool. Yeah, you're able to do one per, yeah, as long as you know that, that's really good. Yeah, because I just know that for sure for Chicago. Unless you have like your license, then I don't know how it works for that in Illinois from there. But the last time I checked. Cool. There's no pictures on Zillow. Let me check through. I'm guessing this is like an off-market property. When I look at some deals, or any deal overall, I always like to look at the neighborhood. The reason why is because it gives me a perspective to seeing if there's other buyers in the area, if there's any other properties that are getting fixed up in the area. Also seeing what's around this property, which it looks like we have a public school right across the street. So far, this could be a great property for a family. So it could be a great area for like a first-time home buyer who has kids as well too. But let me check out the area. And also too, this is doing like virtual driving for dollars. So besides the property that we're looking to as well, I'm able to find some other deals, possible deals. Because I don't know if this is like the current Google Maps 2024 version or if it's like an outdated one. Sometimes it says it like on the sky. There's a lot of white, so it's gonna be a little bit hard to say. Or sometimes say right here at the bottom. It says 2024 Google right here at the bottom right corner. But like I said, I don't know if this is actually 2024. But what I'm looking for is basically some other properties that are getting fixed up, seeing what kind of projects have been done, like in this area, and get like a sense of the roads as well too, because not all roads are the same. From state to state, city to city. So I want to get like a sense if there's if this is going to be like a high risk area for my end buyer at the end of the day, or is this going to be a not so risky, but that's cool. It's kind of telling me it's not too bad. And let me check out a few other things as well too. So through Zillow, what Zillow has is, oh, it's not there. It's on the map. So if you click on the map, um, you get like a bigger view. Let me check out some flooding sections as well too, because I know Chicago is really close to a lot of waters, aka the river and um, the giant the giant section right over here of water. So I wanted to check out that out real quick. And also some of the area, trying to set up where those high traffic roads are looking like. So it looks like we're kind of away from that. So that's really good. We have a park close by, another school close by. So this looks like a really good neighborhood. If you happen to know the neighborhood, it's always really good because location, 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 it's always really important for a lot of buyers. Now, internally, I don't know what the property looks like internally. If you got like a chance to look at the property internally, cool. I'm gonna try to use some resources, other resources to find if there's any pictures of the property. Sometimes realtor.com has a few more pictures than anything. And yes, it does. See, that's why I gotta use some free resources. I'm guessing this might be the latest condition of the property. Um, so I'm not even in Chicago, and again, I'm just using what I have access to from here so I can check it out. But this is the way the property looks like or externally. So I'm guessing it's going to be the same for right now. So off the bat, I'm gonna start listing it down. We can do some painting, definitely some flooring. I'm not sure if this is a homeowner that lives on the property or is being rented out. The two are very different from each other depending on the work. Depending on who lives in the property, it depends on the work as well too. If it's a homeowner, cool. If it's not, if it's being rented out, then that's a whole different story. For this one, it's a 2 unit and the owner has two tenants. Okay, thank you. That really helps it out because being a tenant property, um, it's gonna be a tenant work. So it could be very, very minimal work in terms of like getting it fixed up. So just based on it, and I was just listing paint so far and carpeting. Um, the kitchen looks really good. It can just get retouched up, maybe make it a white. The flooring looks really good as well too. So like I said, I'm seeing, especially being rented out, you go do the minimalist work as possible, just so that way it can get rented out again, and especially as quickly as possible too. So it just requires just new appliances, paint, maybe some flooring here and there, and I'm not sure if this garage or little storage, it's like, or if the tenants have their own laundry, or we can make this like a coin laundry section and they can bring extra income as well too. or it can get converted into like an additional apartment as well too. Probably has to be legally, especially with Chicago. I know Chicago is very strict on a lot of laws. But that's what I'm seeing so far on my side, especially being rented out. Because this is a rent, it has two tenants, then I'm not going to be using my ARV calculator. I do have a complete rental calculator, but what I do want to do with my ARV calculator is it gives me the full breakdown on the repairs. So this is a 1766 square foot home. So let's go over here, 1766. I don't know what the pricing is. Let's go. Zillow has it at 130. If it's being rented out, I'm guessing the seller is asking like 150, 160 um, at the most for this property. I'm just taking a random guess. If you have that information, James, that'll definitely be great. If you don't, it's perfectly fine. But I'm just estimating so far. If it's less than that, hey, this is gonna be a great deal. The basement, I need to find out the basement information because I know Chicago has some basements, few of them. It does have a full unfinished basement. Usually the basement is like half to like less than half. I'll go with like 600 square feet. He listed at 149. Hey, man. You can look at the history. At the history. Um, history. I see the history from 2021, but I'm not sure if you already know how much she's selling it for right now. Uh, Collateral estimate. Yeah, so I was just estimated 150, 160. So I was kind of like right on. Last time I sold for 139, kind of like 2 years later, Zillow had it there. Zillow had it listed and removed 2021, but the last that was 2021. So again, with the new, I don't know if the tenant the if he rents like the prices. So that's the thing. Went from 150 to 139, then he pulled it off market. Oh, so this is kind of old too then. Okay. Hey, that's fine. That's fine. So again, I put like a rough estimate. If it's like I said, if it's less than 160, then it's best. It works best on our side. But what I want to get out of this is just basically the repairs. The repairs, if you guys will go back to the average price per square foot on the repairs, especially being like a rental, it's gonna be more on the light repairs. So this one I'm gonna put in $15 per square foot, and it does have a basement. I'm just guessing right now on the basement. Usually basements are like half of the living space, a little bit less from time to time. So I'm just gonna go based on like $600 per square foot. And usually for the basement, so if the living space, let's say it's like $15, the basement is gonna be half of the living space. So if the basement, if the living space is $15 per square foot on the repairs, it's gonna be $7 per square foot like on the basement, maybe a little bit more just because it's I don't know. I truly don't know how big it is and what kind of condition it is as well too. But it is unfinished. So it's probably gonna take a little bit more than $5,000 for it to get fully updated. But just to like fix it up in terms of like rental wise, you can spend a good 32,000 on like getting it updated. So keep that in mind as well too. But part of my analysis for this, I'm going to be using the complete rental calculator because the complete rental calculator, it's really going to come down to the income and the expenses. And what I mean by that is going to start off first things first on the price. He listed at 1.4. So you mentioned that he had it for 150. So let's go with 150. Let's say the seller is asking $150,000 from there. Um, I don't need to step in place into the home to get like the market analysis for this. What I like to use, especially on the rental side of analysis, same thing. I use Zillow rent estimate, and I like to use this other one called Sumper. Sumper. There's like AirDNA. There's a bunch of them where you can get like the rental estimates from it. I found these two to be like very good and kind of like really spot on. Sumper average rent in, and then take away the address, just leave the city, the state, and the zip code, and it's gonna give you it could be the first link or the second link. You see it's like average rent in Roseland. So I don't know if this is considered Roseland, Chicago. I don't know Chicago very well like that. Um, I don't know where Roseland is. So I'm gonna go base. Oh, it is Roseland? Oh, awesome. Man, you answered my questions right away, man. Thank you. Um, so this is it does say 5 bedrooms. And this is where it gets tricky. 5 bedrooms. Oh, awesome. That's really cool. Thank you, thank you. It does say that it is 5 bedrooms, so this is where it gets a little bit tricky because I don't know if it's gonna be, well, I'm guessing for sure it's gonna be a 3-1 and a 2-1. In terms of like the two units, yeah, 3-1 and 2-1. So we're gonna be looking at apartments, and I'm gonna be looking at a 3-1 for right now. So Roseland 3-1s go for 1160. What Zillow rent estimate does, when you paste in the address, it gives you the whole number. So this is, if it has two units, you divide the number by two. So 2269, I'm gonna call it an even 2300 number, because it gives you a range, but then the actual number you like to go based on is this big number, the bold one. So it's 2269, or again 2300. I'm gonna divide it by the two units, so it's gonna be 1150. And over here, Zumper 1160 on the 3-1. Let me check out the 2 bedroom one. And oh, I need to search it as well too. And the 2-1 is 1200. So yeah, we can both of them can get rented out for 1150. Again, it's a plus or minus game because it really depends on what the market is going. But now I know the rent for the two units. So I'm gonna go based off 1150. So let me take a step back now and let me go through the property analysis in terms of like the rental side. So the seller is asking $150,000. Let's say we want to take like a loan out of this one. If the end buyer happens to be cash, cool, it's perfectly fine. But this is going to give us like a perspective out of it. And let's say we got a loan. The loan, I'm gonna go with like 7.8% interest rate. The rates are still kind of high right now. I'm gonna do 10% down payment. Usually less is preferably better. I don't like to do conventional. Um, but you can do a 10% down payment, and this is going to be your monthly interest, principal, and taxes. Closing costs are going to be between 2 to 5%. I always like to go with the most. I'm gonna go with like 4%. It's always a little bit less, a way less than that. Just I'm playing it safe right now. So I need around $21,000 for my end buyer to acquire this property. Now, so that's expense number one. Next is, let's check out the income, which we already did some analysis on the income side. And we came into the conclusion that this property is a 2 bedroom, 1 bath. That unit can rent out for 1150. And then the other unit is going to be a 3 bedroom, 1 bath. Same thing is going to rent out for 1150. Again, it's a plus or minus, but let's just play it safe for right now. And the property is going to be bringing, there's no garage. Well, there's a garage, but you mentioned it's out of shape. I don't know if the tenants have their own laundry, or if we can convert the garage to like a laundry or maybe some storage for both tenants. Um, or if you can do something to bring extra income. But for right now, it doesn't bring any extra income. So it's just the monthly rent that we're paying for it. And the monthly rent for that is bringing so far, the income is $2,300 a month, or AKA $27,600 for the entire year. Our next expense is the full breakdown of the analysis, which the expenses are going to be the following. There's going to be taxes, there's going to be insurance, there's going to be HOA. In this case, there's no HOA. Sometimes there is, sometimes there's not. There's going to be maintenance, there's going to be vacancy, there's going to be property management. Especially if you're out of state, you're going to have somebody else manage the property for you. So I can break down each single thing, but for right now, I'm just gonna go play it safe and go with my investing rule, which is a standard 40%. So let me uncheck this. So if you're out of state and you're trying to invest this for yourself, you're gonna have somebody manage it for you. So the expenses on this calculator, stick to 40%. If you're gonna be managing the property yourself, then now you're able to take 10% away, and it's gonna be 30%. So 40% property management, no property management, you're managing yourself 30%. So let's do 30. All right, cool. You want to do 30? Let's do 30. So you're doing 30%. Again, your expenses, it's gonna be a plus or minus because it's just a rough estimate. We can break it down to like the dollar, but I'm just trying to calculate this as quickly as possible, especially if the property's off market and maybe the seller's really urgent on selling, they're really motivated. I'm trying to calculate things as quickly as possible to bring my offer as quickly as possible. So my income is $27,600 every single year. My first expense is again taxes, everything I was just mentioning. So we have $8,000. My net income so far after those set of expenses is $19,000 or AKA $1,600 every single month, which is really good off the bat. Now the calculator does the easy homework for you and it shows you if the property is going to be cash flowing and it's not good, or if it's not going to be cash flowing. And so far for this property is bringing a total cash flow because we do have to deduct the number one first expense, which I was mentioning in the calculator, which is the mortgage or the debt, what they like to call is debt service. So the monthly payment on my loan is 971. If we multiply 971 times 12 months, it's part of this number right here, which is called debt service. So debt service and mortgage is the same thing. So if I'm making $19,000 of net income after my first set of expenses, my second expense is going to be my mortgage. When I subtract those two, whatever is left over, that's going to be my cash flow amount. So on this property, if you were to buy it at the $150,000 asking price, and then the rents, the rents right now are at 1150 each, then this property is going to be bringing you $7,658 dollars every single year, or a total cash flow of $638 every single month, which is a 36% cash on cash return, and which is really good. The higher the number on the cash on cash return, the better it is. And you're also buying it at a cap rate. And what cap rate basically means, it involves risk. The lower the number it is, the higher the risk investment it is. But over time, the property's value goes up significantly. If it's like 10, 15, 20 years, just the value of property goes up significantly. But then what you want to do with cap rate, what the strategy, what a lot of investors do is they buy at a high cap rate and they sell at a low cap rate. And the reason is they do this is because, again, the market is changing, the property's picking up in value. You're slow. I don't know if Chicago has rent control or if it has if they're more landlord friendly. So they're on their buyer side or the homeowner side, or they're rental friendly, where they'll support more of the renter or whatsoever. So if you try to kick them out because they're one day late, you're not able to do that whatsoever, like any other state. But the way cap rate works is it involves risk, which again, it tells you how much risk you're getting into it. The lower it is, the lower the cap rate is, the higher the price of the property will be. So right now, if you buy it at a current asking price of 12.8% cap rate, what you want to do 15, 20 years from now, once the property picks up in value, you want to sell it close to like 6%, 5%, 7% cap rate. So you want to sell it at a low cap rate. But for right now, for training purposes and educational purposes, is you can still negotiate. Real estate is still negotiable. So even now you know how much of a cap rate you have based on the potential rent, you still can negotiate out of that. So if you're at 12.8%, I'm gonna call it an even 13%, and I'm gonna show you right here. This is what cap rate does. So I'm closer to like 13%. We're really close to like the asking price of the property. So again, if you buy it right now at 148,000 to like $2,000 of a difference from the asking price, Eventually, what you want to do down the line, 10, 15, 20 years from now, again, you want to sell it close to like 6% cap rate. This is how much you're going to be selling the property. Because again, over time, the properties pick up in value, and depending on the market as well too, the neighborhood, there's a bunch of factors into it. But that's the strategy that is involved in cap rate. This is like a rough estimate on how much you want to sell it, or if you want to push it close to like 5%, this is how much the property you're going to be selling. Especially in some neighborhoods. Again, it really depends the where the average cap rate is. Here in California, the average cap rate is like 5%. So as you can see, that if it was like here in California, it would be a very expensive a property, but then the price of the property at a current market will be a lot more than that as well too. But for right now, like I said, we're trying to negotiate in this deal. So right now it's close to like 13%. I will push this my offer more towards like the 18% asking price. So like maybe 107, $110,000, and then slowly and steady just come down. And like the most I'm willing to pay for it will probably be like maybe I wouldn't say 120, I'll say like 125, maybe 128. So that way you can still get like a deal out of it. Because now let's say you buy it at $128,000. That's all I have to do is just change the asking price. If you buy it 128, the rent stays the same. All the other expenses, like the mortgage, the initial investment, all those numbers are going to be changing from there. And then you went from $7,000 of yearly income to now roughly being $9,000. So you earn an additional $2,000 extra on the cash flow. And this is the cash flow that you can use to either repay your loan faster, or you can look for another investment as well too, or maybe partner up with somebody else to look for like another investment. So this is the way you will analyze a rental property. If this was a homeowner a homeowner owned property where the homeowner is just selling the property as is, there's no tenants involved or anything like that whatsoever, then it will be a whole different calculation. But when we're looking at rentals, it's really down to the numbers whatsoever. Hello. Awesome. So it looks like we have Raja. Raja. Hopefully, I'm able to pronounce it right as well too. So he's an investor as well too out of San Jose. So if you guys have any deals out of there, definitely let him know as well too. And if you guys want to, I will set up like a meeting or like a group so that we here in the Zoom as well too. If you guys want to network with one another as well too, you guys can go through those events as well too. But I want to go back to this example really quick, just to like analyze it if it was like a homeowner buying the property. And if the way the homeowner will buy the property is, let's say, selling $150,000. Again, the living space was 1766. Um, Instead of doing like a regular light repairs type of work, we're going to be doing more of a fix and flip type of deal. So we're going to be requiring a little bit more updates. The square footage I put on the basement, 600. So now we're going to do more of a project property. Let's say based on the pictures that I saw from realtor.com, I can see again floors, paintings, windows, anything. Definitely like the kitchen, at all whatsoever. Bathroom, that's 5 things. What else? What else? That's the bathroom. Definitely the garage is gonna be like another expense, and of course we're gonna do in like the basement. So this could be more on the flex and flip side, or the um average repairs for this. I'm estimate close to like $35 per square foot. And then the basement as well too is going to be half of the asking price. So there's going to be close to like 17 dollars per square foot on the basement. So now we're looking on the fix and flip side to sell this home to like a first-time homeowner, especially with the school right across from for this homeowner that takes over it. We're going to be spending roughly around $72,000 on the repairs. And then from there, we want to make sure that we make our end profit on this deal. Let's say we want to make a profit of 20% on this deal. For us to make our 20% and with the repairs, we need to resell the property to $284,000. So this tells me I have to find comparables selling close to this asking price or for this resale price. If I'm not able to find anything really close to that, then I gotta see what the market is gonna be telling me in terms of like this deal, and that's where I'm gonna be looking for comps in this area. Let me look at the map really quick so I can see. Okay, cool. Uh, I'm going to be looking for comps in this area that are going to be telling me what the market is in both on the fix and flip side and the no repair side as well too. So my property is right over here. We know we have like the school. Let me set my filters. So the property is 1766. I'm looking for properties that sold in the last 6 to 9 months. Let's go with 6 months. The property is 1400 all the way up to like 2000. And where's it at? 124th Street. So okay, so it looks like my property is right over here. So I do have a comp on December 1st that sold for 215. This property fully updated. So this is the kind of work that we're looking to do. Um, great comp off the bat. Fully updated kitchen, brand new appliances, granite countertops, lighting, windows, painting. You're gonna be seeing. So this is exactly the kind of comps you're gonna be looking for, and this is a finished basement right here. I can tell just by these stairs right over here, this is gonna be the basement. And this is what a finished basement looks like. It just looks like it's an extra part of the home and it just flows smoothly to the basement whatsoever. And then this most likely gonna be the garage, maybe like a storage thing. But great basement overall whatsoever. And it looks like there's like a full shower down there as well too. But this is a great comp and it sold in December, so really good. 1950, so this sold for $121 per square foot. So should you comp for multi-unit? Yes, you should always look for some comps that are be selling in the area as well too. Um, Based on like on the area, maybe some other homes got converted to because I didn't see this one. Usually you're able to tell there's multi-families in the area when you see two mailboxes. So I think your example property that you provide us, thank you, James. I appreciate that as well too. Um, it's one of those properties that it's not a legal duplex. It's just how it got maybe position or there's like that split of like the units. So I don't think it's a legal duplex whatsoever unless it's already fully legalized from there. So that's the only thing. It really depends if there was like permits and things that were done to make it a multifamily type of home. Just because I didn't see any of that information over here on Zillow or Redfin whatsoever. And when I was looking at the streets, I was paying attention to that. I probably didn't call it out, but I was trying to pay attention to the homes to see if there's multiple mailboxes as well too, which I didn't see any of them. So I just consider this more like a single family whatsoever. But again, maybe the end buyer has to, if they want to, they can legalize it themselves. Um, but that's the thing. It really depends on that side as well too. So if you were to look at multifamily properties and it says it's a duplex, it's gonna be like on the parcel viewer, it's gonna be on the records where it got converted legally to a multifamily, then you want to compare it to a multifamily. But based on the area and based what I was just looking on pictures, I don't think this is a legal multifamily property whatsoever. So I would analyze more on the residential side. Because again, what I'm finding so far in these pictures, I'm seeing some good I found that first comp off the bat. This is like another one as well too, single family. Uh how many bedrooms? This is a 5 bedroom, 2 bath as well too. Same size, same as the our subject property. So I'll say more on the single family side. unless the end buyer wants to do a legalize the multifamily side. So for this property, this one sold in November for 148. How much was the first one? 121. So now I'm going to be confirming my with my comps. So 121 was my first comp, 141 or 148 is my second comp. Awesome. So far we're looking around 220. Let me look for another one, which I have this one right over here. What's up with this one? Property being sold as is, Georgian, basic. All right, cool. Same thing with this one. Great condition, updated, and this sold for 115. So 115. So this big number right here in the middle, that's gonna be my ARV. And if you guys look at the ARV, it's really similar to this number right here, which says my purchase price resale needed. But what it means by my purchase price is if this property is selling for $150,000 from the seller, and I'm trying to fix and flip, this is my possibly offer that I should be submitting. The cool thing with this calculator, it does it automatically. So if it's trying to fix and flip, if you're trying to buy and hold, or if you're trying to wholesale, in this case, James, then this is how much you should be getting your property in the contract, possibly off the bat. But you want to confirm the rest of the information, check out the repairs, look how much it needs to be resold for, and then these numbers, the reselling price, this gives you like a range on what kind of comps you should be looking for. So when you look for comps, you wanna see where those comps are lining up. And so far, the property can sell for, I'm gonna call it an even $230,000 once it gets fixed up. And then right here, the calculator is going to calculate how much your buyers will actually want to purchase the property themselves for on their contract. So an investor that is very aggressive, they're very aggressive with their numbers, they're very aggressive with like their materials, and very aggressive in terms of like how quickly they're able to like resell it, then they will want to purchase it for 88,900 or $89,000. Then you have another conservative investor. They're probably going to use less expensive materials. They're probably going to take a little bit longer, and they'll want to purchase it for $110,000, $111,000. And so now that you have this range, this is where you want to look um, into like your wholesale fee, where you want to make sure that you stay kind of like below or start getting closer toward this asking price. So if you're trying to get like a 15, maybe 10,000 or $20,000 wholesale fee, you want to make sure that you're getting a little bit below this asking price. Whenever you want to sell the assignment of a contract, because again, I was showing you earlier on the investor breakdown, is why would a seller buy it for more than what they're actually purchasing it? It's because again, you're the one doing the hard work. You have it's up to you on how much you get rewarded. So if you happen to get the property in the contract, let's say for $85,000, you can do the contract assignment or sale for $95,000. So that way you're able to make, like I said, 10,000. Maybe if you want to push a little bit more as well too, because you see how much what's the most that they're willing to make out of this deal, and the calculator breaks it down how much profit they're going to be making as well too. So especially in this area, I don't know what the profit on a lot of investments are for a lot of investors here, but this is going to be like the breakdown of how much roughly they're going to be making on their deal. So if you find somebody who's interested in making like an easy $30,000 on this deal, and again, they're willing to purchase it at your asking price on that contract of assignment, then you definitely have like a deal with this property. And especially, I just did the comps for you on this area. You have your three comps right over here, 215 for one of them, 210 for another one, and then this one sold for 230. And again, based on we average those average price per square foot, so that's where we got our 230. So it can definitely be sold for 230 for this area. And again, it could be more, and it could be possibly a little bit less as well too. But we know how much of a lot of the properties are selling for, and that's why you have to do some of your due diligence. And now you know how much a lot of your how some investors are willing to purchase it for, and additionally to how much they're going to be making on the profit side. So hopefully that's able to help you guys look into like that analysis. Again, I didn't mention like a few other extra things. It just takes more time to like explain other details, but that's the entire breakdown of the analysis. And that's what I like. That's why I designed the calculator to help you like put yourself into the perspective of the investor, see how much you're going to be making, like if you were to be the actual investor. But if you're trying to wholesale a lot of these deals, you know where the wholesales are going to be at. And again, it's all about confirming a lot of information because it really comes down to you doing your own due diligence. But the calculator guides you into seeing where the numbers are going to be at because again, real estate, it's really down to like the numbers. Of course, my pleasure. I'm glad it really helped. So that was two analysis, one property that we analyzed both on the fix and flip and the rental side. So hopefully that's able to help you guys out. I'm gonna leave it open for some Q&A. If you guys have any questions, and I am gonna be opening a breakout room. So if you guys want to network with one another, I know there's a few buyers over here that might be interested um, on just networking with other wholesalers or just talk with each other. I'll definitely open up that break room or that breakout room. But you guys are able to unmute yourselves if you happen to have like any specific questions to me on the wholesale side. Or you guys can drop your questions in the chat as well too. There's no awesome. My pleasure, my pleasure. I'm glad I'm able to help you guys out. Of course, my pleasure, Raja. Hopefully I'm pronouncing it right. You're good. No questions. Then I'm gonna leave it open. Then if there's no questions whatsoever, I really appreciate you guys coming in. Again, I'm gonna open up the break rooms if you guys are interested on if you guys are interested on networking with one another. I'm not sure who's wholesalers, who's agents over here, or whatsoever. I get properties in San Jose. So, yeah, so we have Zachary, one of the buyers who's buying properties in San Jose, um, which is really cool because I'm from the Bay Area. It's funny that you mentioned it, Zachary. Um, but I'm gonna open up these rooms for you guys so that we guys are able to like network from one another. All right. Let me open this. Cool.